Well, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The state of the AI trade. Many of the biggest names down again today. Has it left this market vulnerable to a larger pullback? We will discuss that with the investment committee. Joining me for the hour today, Josh Brown, Joe Terranova, Bill Baruch, and Jim Lebenthal. So we've said stocks are down again, which they are, across the board, not by a large amount, obviously, but nonetheless, the consistency of today's move is one that we're watching. Rates are an issue. And they really have been since the Fed cut. Rates have been moving up. They're up again today. You look at the 2, the 10, the 30. 2-year was at 355. They're 365 today. The 10-year, 408. That was before the cut. They cut, now they're 418. The 30-year, 468 before the cut, now at 477. Outside of Stephen Myron, of course, who's advocating for many, many rate cuts, more of the commentary of late from Fed officials has been a bit more cautious. So why don't you set the scene for us, Josh? It's good having you back here at Post 9 in person on how you think on how you think this market looks. And then I want to really lean into some of these headlines that Ken Griffin made within the last 30 minutes or so.
I think it's vulnerable because it's while it's broad and we've seen rallies away from tech, we can't deny the fact that tech is really what's fueling the enthusiasm overall. And I think when you look at the give back in Oracle over the last couple of days, Oracle is an outstanding company. It's not a judgment of the fundamentals, but to take a stock like that up 40% on news that they are now willing to go negative cash flow and take the AI arms race into a brand new paradigm, because prior to that, it's companies spending out of cash flow. Now it's a whole different thing. Now we're talking about debt levels. It's starting to look more industrial to me, and that's why rates all of a sudden matter, especially the 10-year, but while it's not as low as it was, not as high as it was, at the highs at 5%, it's still hanging up there, and that's a really big factor when you're financing projects out of debt. So I think that's now become an issue for the technology market. The NASDAQ itself is in the midst of one of its longest win streaks in 50 years. Today will be the 102nd consecutive close for the Qs above the 50-day moving average. Not the 200-day, the 50-day. Think of what a rally like that looks like historically. There have only been 7 other instances of a longer streak, and if we go another 30 or so trading days above the 50-day, that'll be the all-time record streak. So
I'm glad you bring that up. Let me just interject for a moment, because I'm really happy you brought that up. So there's a stat out there today that, well, what Josh says is you're getting close to the point where similar streaks have come to an end, which is, I think, part of the point that Josh is making about the vulnerability of the market. The highest since 2017, remember, so we've done 101 trading sessions where the Qs have closed above the 50-day moving average, okay? Since 2017, the highest has been 107. Today would be 102. We're down, though, so maybe we don't get it. But the highest would be 107, and that was since 2017, the point where similar streaks have ended in the past.
So here's the thing about bull markets. I'm an internals person. I know a lot of people say disregard it, ignore it, but I've never been able to. AI-related stocks have accounted for 75% of the S&P 500's returns. And so not just NASDAQ, but the overall market. 80% of the earnings growth for the S&P and 90% of cap spending growth since ChatGPT was launched. That's according to my friend Michael Sembelis at JP Morgan.
Does amazing research on a whole number of big picture topics.
Correct. So you've got a ton of concentration, not just in AI in the NASDAQ, but AI in the S&P. And when you look at the internals, 59% of stocks in the S&P are above the 200-day, which means, like, obviously 40% are not. So while it's a broader rally than some might give it credit for, it's not all that broad. And the reality is, when you have a streak like this, people get super comfortable. People start doing wild things, like gapping up a name like Oracle 30 or 40% in a day. And when you see that level of enthusiasm, where that comes from is people forget about the other side. They forget that risk exists. So I think we're vulnerable, to answer your question. Mm-hmm. Those are the reasons why. I don't think that's the death knell of the bull market. But my God, if there were ever a time to say, maybe I don't need to add my next stock without taking something else off or lightening up exposure, this is that time.
Maybe that's the perfect segue then to lean into a little bit of what Citadel's Ken Griffin was just saying a little while ago on CNBC, and specifically around the hype and the spending around AI. Those are my words. His words are, quote, "There are certainly echoes of the dot-com bubble in this moment." As Joe, he looks out there and he sees what's been going on in the flurry of announcements in the past few days, all these billions and billions and billions of dollars being laid out for capital expenditures by various companies, the way that investors have chased these stocks up to the moon. Yes, there's been some fits and starts here and there, but what do you make of what Ken Griffin said there? Echoes of the dot-com bubble in this moment. If you take what Josh said from Symbolist, 75% of S&P 500 returns have been from AI-related stocks, 80% of the earnings growth, and 90% of cap spending growth since ChatGPT launched in November of 2022. In other words, there's been the whole game in town, for the most part.
It has been the whole game in town. It's been that way since 2023. If you think about coming out of a very punishing period in 2022 when the Federal Reserve was raising historically an aggressive hiking cycle, where would we be without the innovation powering forward a lot of the earnings growth that we saw from these technology names? So you have to take the good element of that and then understand that markets are very consistent in taking things to extremes. I like Josh's point on Oracle because Oracle is announcing a $15 billion debt offering. So that's where you get the echo, Scott, of 1999. When you begin to say, okay, this is not cash from operations, this is now, we are going to go access the debt markets, we're going to raise capital, and we're going to use that to spend on the infrastructure. And that's exactly what Oracle is doing. It's one of the reasons why Oracle is on the retreat over the last several days, because they had announced that. They're at $91 billion worth of debt. That's second highest to Apple, but don't make the comparison to Apple because we're talking about two completely different companies there.
On that note, Rothschild and company Redburn today, they initiate Oracle with a sell rating. They say the target's 175. I'll read you a bit of their note. Again, let's show the stock first again, please. Let's do that. Because again, their target's 175, the stock's at 300, more or less. Quote, "The market materially overestimates the value of Oracle's contracted cloud revenues. Our analysis suggests Oracle's 5-year Oracle Cloud Infrastructure revenue guide equates to roughly $60 billion in value, meaning the market is already pricing in a risky blue sky scenario that is unlikely to materialize." It's even more relevant and pertinent for us today in the context of our conversation because, Bill Baruch, you own the stock, but you're trimming it.
Yes.
Are you in agreement with this kind of call from Rothschild today and some of the things that Joe just talked about?
Well, if I was agreement with that call, I probably would have cut the stock entirely. We trimmed it, and I think it's a balance. I mean, the taxable gains that we have in the name right now, but that trim, along with some others we'll get to later on, is looking at just raising some cash here and being able to manage a position that's going to be more higher volatility. It's run up significantly. It's at a 41 multiple. Historical average is 19. It's growing into new muscles here. It's been a repricing. So I think as it has been repriced, growing into those new muscles, it's going to get more volatility at this level. And I think it is a little bit of, it's a lot to chew down here with the numbers that they put out there. So I think trimming it here just brings it back in balance and allows us to watch a few rounds. And I think to Josh and Joe's point, AI and the growth that's associated with AI has been punching above its weight class for a little bit now. And the GDP data today was revised higher. It's all non-residential spending that are having that impact. So I think,
CapEx.
yeah, it's that AI build out that's driving it, the energy build out that's driving it. So, again, this is not saying it punching above its weight class and it's not going to be a heavyweight, but you're going to take a jab from time to time. And this could be a nice little time to see the market pull back a little bit. So we wanted to trim.
I don't know, it seemed like, a couple weeks ago, Oracle was doing just fine in the middleweight class. Maybe a super welterweight or whatever, and then it automatically just stepped up to the heavyweight class within a matter of hours with the earnings report that just blew everybody away. Yeah. I mean, analysts literally left stunned. When the report was released, the stock shot up to degrees that you just don't.
It went parabolic.
Often see.
But keep this chart up,
Judge.
It's
up 31.5% this month.
But look at the run up. Look at the run up from the April lows into that earnings report. It's not like it was entirely a mystery that Oracle was doing really well. I think the stock added 100 points and then reported that quarter and added another 100 points in a couple of days or maybe a week. And that's the action that I'm talking about. It has nothing to do with the fundamentals of Oracle. This happens with great stocks or bad stocks. Sometimes a stock just goes parabolic, and you just have to say to yourself, does this really make sense?
Well, that's what maybe
sometimes it goes down.
That's what maybe not trying to assess what Mr. Griffin's looking at when he makes the comment that he did a little while ago. But you'd forgive him certainly if that was one of those that jumped out and was like, they added $100 billion in market cap in like 10 minutes. When he says there are certainly echoes of the dot-com bubble at this moment. You have the stock, too, not to pick on this particular name, but it is notable that it's up 31.5% this month. When we're hearing some commentary like Griffin's about the overall environment, and you have people like Bill trimming the stock.
Yeah, and I think also not just about the returns, but Bill, you mentioned the 41 times forward multiple. Remember, Oracle's on a May year end, so if you look at May of 2027, kind of the year ahead, it comes down to 36. You look at May of 28, and it comes down to about a 26 multiple. So either the stock is correctly priced, and the earnings are going to come in from OpenAI and others, and we're really looking at a stock that 2 years from now is going to be trading in the mid-20s multiple, or that money from OpenAI isn't going to come in. Frankly, I think the NVIDIA deal that was announced a few days ago puts a lot of wind in the sails as far as where is OpenAI going to get that money from. But I don't think let me cut to the chase. We will eventually be in a bubble in AI. We are not there yet. We just are not. If you want to know what a bubble looks like, look at the multiple of Cisco in 1998. It was around 30 times, shot up over the next 2 years to 120 times. That's not what's been happening for the most part.
Maybe all bubbles are not created equal, that if you're looking for some historical precedent based on old numbers versus new, maybe that's not the right way to look at this story.
I'll tell you what. Can I dance with that? I mean, I want to disagree with it, but if there's a difference this time, it's that the earnings are really coming through. We are most likely in the middle earnings of the earnings growth. When a bubble happens, it's when the earnings growth isn't there to support these lofty valuations.
That's why I'm suggesting to you that it's a fallacy to look back at 1999, 2000, and try and make comparisons to some of the mega cap names today.
Scott, yes. I mean, I'm sorry I missed your point, but I'll make it my point at least a little bit clearer. I don't agree with Mr. Griffin. I don't think we're hearing the echoes of 1998.
I don't think, though, that he's specifically talking about Oracle. I think what Ken Griffin is referencing, we're starting to see the same stuff we saw in 2021. And I saw a commentator earlier this week on CNBC, I forget who it was, say something to the effect of like, well, we don't have this like IPO boom, therefore it's not 1999. I would argue we do have it, but it's taking the form of companies that went public 3 years ago, pre-revenue, SPAC. Those are like the new IPOs this year. You look at how some of these stocks are trading, the nuclear stuff.
Josh, what if it's 1997?
The quantum computing names. It's a fair point. I'm just saying, if you're looking for signs that it's an egregious bubble, I don't think you're going to find them in NVIDIA and Oracle per se. I think you're going to find them in companies that we've given 30, 40, 50 billion dollar market caps to that have no earnings and in some cases have no revenue. That's like where I think where Griffin is looking, and he's like, wait, how much volume did that stock do? I never even heard of this company. So you have the IONQs, the Rigettis, the Oklos. Like, these are, I'm not saying they're bad companies. I'm saying the activity in those stocks is more reminiscent of the dot-com bubble
and you know what?
than,
you don't have
than
to be,
Oracle.
Well, that's why Jonathan Krinsky. That's why Jonathan Krinsky's out in the last 24 hours or so, saying that those types of high volatility names are poised for downside reversion. And he talks about some of the quantum computing names that have gone absolutely crazy in from time to time through this.
That's been known to the market for the last several weeks. I think that's been obvious to everyone in the market. I think you have to look at the actual indicators to suggest that it's beginning to occur. I think it's a combination of everything. I think it's a combination of 97, 99, 2021. Markets go to extremes. In the case of Oracle, you're talking about a stock that rallied aggressively from April. But yeah, what happened on September 10th? The stock went parabolic. And when stocks go parabolic, there is never usually a good outcome to that. Generally, that is a top.
So Palantir then, Bill? Let's discuss this one, okay? It's on track for its 7th straight quarter of double-digit gains. Not just gains, double-digit gains. Only Amazon matched that kind of streak, and you got to go back to 1999 to discuss that. You want to address it?
I talked about the multiple of Oracle. I'll talk about the multiple here real quick. I think it's 230 for multiple. We're not in this name because of the multiple, of course. This was an ad I purchased on the basically on the show in May or April, $80 or so, and we've stuck it out. And it's one that you want to size properly in your portfolio. There's going to be those 5 to 10 or more % days, and for us, it's a 1.75% holding, and it's a long-term holding for us. I think they'll grow into the earnings. I think different contracts that you're starting to see develop, they are the fast track. If you want to fast track AI as a country, as an institution, as a company, you're hiring Palantir to come in there and clean it up and connect it, and their contracts are going to expand. So we like the name. We're going to be very patient with it.
It's a retail popular name, yeah. Obviously. By the way, there was an interesting note today from JP Morgan's retail radar that I thought we would bring up. Trying to get inside, I think, the psyche of the retail investor. Activity in single stocks was very subdued. This week marked the first time this year that we observed 4 consecutive days with net retail trading in single names below $100 million in absolute value. That's pretty interesting. Mag 7 retail activity, they say, has been largely muted since July. How do you want to talk about that? Like, I mean, retail seems to be wise.
So I said 2021 is the more,
maybe where we are.
I said 2021 is the more apt comparison because the Mag 7 stocks are just like, they're not juicy enough for this generation of traders and what they're up to right now. People are out there looking for...
they want the opens.
Yeah, people are out there looking for 10 baggers, 20 baggers. They're looking for stocks that can give them 1,000x return. That's the stage of the rally that we're in. You don't get that until the NASDAQ 100's already been up for 100 consecutive days above its 50-day.
There are a lot of cult stocks in the market. Open Door, for example.
Yeah,
we're talking about a lot of these things.
And it does not mean that they're all like spontaneously going to combust. I'm not making a judgment about the individual companies being caught up in this. I'm describing the enthusiasm of the Robinhood trader, who, by the way, is only a segment of the quote-unquote retail investor. Because when you look at AAII, those investors who are not on Robinhood, those are Charles Schwab investors, they ain't acting this way. And they're not talking this way. And it's like, so when we say the retail investor, well, which one? Yeah. Well, the one that's over 60 or the one that's under 30? Because I promise you, they're not doing the same thing right now. And it's really important to bear in mind, there's not one retail investor, just like there's not one professional investor.
Well, the retail investor is very smart this day and age. And the one thing to kind of connect the dots is last year the Fed cut rates and yields went higher. This year was a labor force cut. Yields were expected to go lower. You're seeing a herd mentality within these retail traders to start saying, okay, rates are going to go lower. What stocks are going to capitalize? We've already seen a big run in the Mag 7s over the last couple of months. What stocks will capitalize on rates coming down? And that's where we've seen that move.
Maybe investors are trying to wisen themselves up to the idea that rates are not going to go down like maybe they thought they would.
Yeah, and
I mentioned what rates have done from the Fed pre-cut to where they are now. Similar trend to what happened last September, 1 year ago, when the Fed first cut in this cycle, and rates actually went up. Yeah. I do that on purpose to get me back to Ken Griffin, because he did comment on what he thinks the Fed will do. He says, I think they'll cut one more time this year. They've cut next year, but one more time this year. He called 25 basis points a, quote, symbolic move, won't have a meaningful impact. He was asked about Fed independence, which he has spoken out on in the past, and he reiterated his belief, quote, if I were the president, I'd let the Fed do their job and have as much independence as possible. And he also tied in part, weakness in the dollar, which has surprised many, to overall policy volatility, and in part the battle over Fed independence. He weighed in on tariffs. Okay, maybe tariffs haven't caused the kind of inflation that some had suggested they would to this point. Undeterred seems his view, it's coming. is what Ken Griffin, Joe, had to say. What do you think?
I agree with him on the Federal Reserve. Keep in mind, we had a very big spike in the U.S. dollar in 2022 when we went through the monetary tightening cycle. We have now returned to where we were in 2022 for the dollar. I still think the pressure on the dollar for further downside is there. I think that's obviously going to benefit gold. But I think the most important thing...
We called it a tailwind for driving profitability for companies, too. So, I mean, it cuts both ways.
Multinationals.
It's representative of something, but the effect of the cause is positive for profitability.
Profitability for multinational corporations, without a doubt, profitable for, if you're thinking about asset allocation, going outside the U.S. for the very first time in many, many years. But turning back and thinking about Fed policy and maybe trying to understand why the retail investor over the last several days is sitting on the sidelines, you're going to lose that broadening out opportunity, in particular for small caps. We talked the other day with excitement about the XBI and biotech and the rally broadening out. But if you continue to get strong economic numbers, and if you have skepticism, if in fact the Federal Reserve is going to give you more than maybe just another rate cut, then that small cap broadening out opportunity is going to really be in trouble.
We got a few minutes left in the A block. Let's kick some moves around, because Bill not on all that much, so we don't get like daily updates to bring our viewers on what you've done in your portfolio, but you have some significant moves I want to do. Yeah. So you trimmed Micron, you trimmed Tesla, and you trimmed Cameco. You sold Freeport-McMoRan, which was the focus of a pretty good bull-bear debate of late. Can you take me through like the most important out of that?
Yeah, we trimmed Micron ahead of the earnings report. It's a name that I've talked about on the show quite a bit. High bandwidth memory. They are really chewing into a larger chunk of that market, and they're going to continue to be a great company. We just felt that a lot of the good news was priced in for that earnings report ahead of it. And last June, very similar. It fell out more sharply then. But trimming that with ahead of that, you had Broadcom, you had Oracle, and Micron capitalized on the back of that. So it was a good little trim for us. It got up to a 3% position. We shaved off 40 basis points or so. Same thing with Tesla. Tesla, very technical, rounded out very nice from May until about a month ago, and it ripped higher. We haven't set a new record high yet. Trimmed about 20 to 40 basis points off Tesla. Another name, Kimiko, that's almost up 100% year to date. It's up 140%, I think it is, from the low. Uranium is continuing to get more action, more political speak, and it is going to have some geopolitical impact with volatility.
Part of the AI trade, too.
AI, powering.
The VanEck nuclear ETF NLR is now $3 billion. It's a very small niche area within energy.
Yeah.
These mining stocks, including CCJ, they're directly taking flows from people that want to bet on the next leg of the AI trade.
And it's been a great move for us. So you look at those four names. We did those all Tuesday morning. We raised about 1 to 1.25% cash and got our book to about 10%. At that point, about 8% cash, and then we cut Freeport yesterday on the open on that news. That is the crown jewel, that mine that they had the issue with. We really don't know how long that's going to be out of capacity, and it really is put shockwaves through the copper and metals industry. And you see others like Southern Copper capitalized on it. But I think with that crown jewel, one of the largest mines in the world, being out of capacity for an unknown amount of time, we jumped out of Freeport, and then cutting that about a 2% position got us to about 10% cash. I think this is from a portfolio management standpoint. We feel very comfortable sitting here with 10% cash and looking for the opportunity to go shopping in the coming month or two.
Jim, you bought more Delta.
Yeah, you may remember, Scott, I raised some cash a few weeks ago. I was thinking maybe the market might pull back. It didn't, but what I said at the time was I will find spots if the market doesn't pull back to reinvigorate my portfolio. Delta has not performed as well as the market has climbed here. Still, we see passenger counts are very high. We see low fuel prices. Estimates are going up. They're nowhere near where they were before Liberation Day, but they will eventually get there. Trades at 9 times earnings. This is an obvious play on a growing economy to me.
All right, we have more committee moves coming up. Josh Brown has a new buy to tell you about. Joe just threw in the towel on a couple of names. He will document that. We got a lot ahead. We'll be back right after this. Okay, let's talk about a new buy first from Josh Brown. PSX, yeah, Phillips 66?
Yes.
Tell me more.
So you were like on some sort of extended vacation earlier this week.
I was.
Frank Holland Frank Holland and I had had a conversation about energy stocks because nobody cares about energy, but there's a little bit of a stealth rally happening in a handful of names in the XLE patch. PSX, I gave it a letter grade. I said it's still a C. Stock's been shaping up over the last couple of days. It's not an A, but I'm buying it anyway. I'm anticipating a breakout. Marathon has already broken out. We talked about it Tuesday. Valero has already broken out. We talked about that one too. Phillips 66 is one of the three largest of that refinery group. Has not broken out yet, but I think that could be coming. Number one, there's a million reasons why an insider might sell stock in their own company. Pay for a daughter's wedding, real estate transaction, diversify the portfolio, whatever. There's really only one reason why they buy. We had 4 board directors at Phillips buy stock this summer, including one a couple of weeks ago of $1 million worth. And you've also got Elliott, one of the most successful activists in the world, quite frankly, now has 2 board seats at Phillips and is on the record publicly stating this should be a $200 stock. So I bought a little bit today, probably not done buying. I do believe that this will follow Marathon and Valero higher. I don't have a stop in, but if you want to risk manage the position, I like 120. That is not only the 200-day moving average, it's also exactly where the stock bottomed in the first 2 weeks of August. The buyers came in force. If they don't come in, the next time it tests 120, I want out. I'll take the small loss. That being said, if Elliott is right, and this should be a $200 name, and the refiners remain bid, I think this thing could work, and we'll see what happens.
At Citi, you have liked this space a lot.
Yeah, NASDAQ worked really well. I was long the stock for a while, but I've been out for a while. Still on my radar. Recently, I've talked about the exchanges, CME, CBOE, like these businesses. Anything that is hosting any sort of trading activity is just absolutely on fire. And so sometimes you'll get big rallies in rates, and the volatility in the stock market, commodity volatility, like all of these things are filtering through to increase profits of these companies, and the market gets it. They're taking these stocks higher. I wouldn't want to stand in the way of any of them. Not currently long CME, but I think the stock looks great.
Farmer Jim.
Citigroup, check the news today.
Bill Baruch.
LNG coiling.
Joe T.
Apple going higher.
Josh Brown.
BRK.B.
All right, Tom Lee and Adam Parker will join me on the closing bell, 3 o'clock Eastern time. Does it for us.
Hello, welcome to Blue Cloud Trading. My name is George. It is Thursday, September 25th, 6:21 p.m., folks. 6:21 p.m. Markets closed. All the indices were down, but not that much, actually. The Dow was down just 0.38%. You can see that it gapped down in the morning, moved back up, and then dropped. NASDAQ was down 0.5%, right? Also gapped down and then started to actually move its way back up a bit towards the end of the day, but it was only down 0.5%. And then the S&P 500 also down 0.5%, dropped in the morning, and basically stayed around the opening price, if you look closely there. And then Russell 2000, that one gapped down over here, and then also just basically very close to the opening price, but it was down 0.96%. So the Russell 2000 down the most. In this video, we are going to cover, we're going to cover a number of stocks that were talked about on today's episode of the Halftime Report. You just saw Josh Brown. I will be coming out with another video with Tom Lee. I'm not sure if I'm going to get it out today, but it might be tomorrow. But basically, in that video, I'll go over his ETF. His ETF is GRNY, and we'll take a look at the sectors in that video as well. In this video here, we're going to take a look at the index ETFs. We're going to look at some of the CNBC stocks that were talked about on the show today. You can see the list right here. We'll take a look at some of the Mag 7s like Apple, Tesla, Meta, as well as PANW. And just a reminder, as far as the, this is a member's request, I only cover the members stocks that are in the members only portfolio. I cover in the video I do each weekend. So if you're interested in becoming a member, folks, consider becoming a member by hitting the join button. You click that join button right there. You've got 3 different options to select. Blue Cloud Supporter, where you can actually request a stock to be, or an ETF to be analyzed on the show, on an upcoming show. Blue Cloud Trader, under this level, basically you'll get access to those exclusive member-only videos that I produce. And then under Blue Cloud Legend level membership, You can request up to 3 stocks or ETFs be analyzed. You'll have access to some of the day trading videos that I've recorded and daily trade updates, which I post. Okay, right next to the post tab, there will be a membership tab. It will pop up after you become a member, and you'll be able to see the trades that I've placed that specific day, and new entries, new exits, whatever. You're going to get information, including more ideas, stock ideas from the scanner. I have a proprietary scanner that I use that looks for the strongest stocks using the Ichimoku indicator on both the weekly and daily time frames. We're looking for buy signals, primarily on the daily charts. All right, but I do always consult the weekly charts to make sure that we've got a strong, stock or ETF. Now we're going to look at the SPY. Let's start off with actually, before we do that, folks, let's take a look at the heat map. I almost forgot to talk about the heat map. Very important. Here's what the markets look like today. So Apple was actually up 1.81. So was Nvidia, that closed up 0.41%. IBM had a nice day, up 5.2%. Maybe we should take a look at IBM and INTC as well. You know what? Let's go ahead and add those in there. We're going to do that. Hit the plus symbol here. IBM. It's as simple as that. And what was the other one? Oh my gosh, my memory's getting bad. IBM and INTC. Okay, Intel. There we go. We'll look at those as well. All right. So the heat map. Let's get back to that. So you can see Oracle down 5.55% today. Okay, Tesla was down 4.38. A lot of the healthcare stocks did not do well today. The energy stocks were up. Utilities mostly down. All right, and financials were mixed. You can see JP Morgan was up a little bit, Bank of America, Citigroup. And then this is the heat. This here shows us how what the performance was for the day. You can see energy was the only sector that was up 0.43%. Everything else was down. Healthcare is down the most, down 1.83%, followed by consumer cyclical and then utilities. So let's get into the stocks now. We're going to start off with the index ETFs. Here's the SPY. We've got the volume down here below. We've got the directional movement index. What we're essentially looking for is that green line that you see there, the positive DI9, to be above the negative DI9. Now today, it actually crossed under. That's a bearish signal right there. And it happened on higher volume. Now the ADX is still moving down, which means that the momentum is not really that strong on the way down. And this could be very short-lived. We've got ourselves a reversal candle here, and it's very close to a support level, the Kijinsen. And many times when price gets too close to that 26 period, which is the red line right there, price will bounce like it did here, like it did here. All right, over here it did close under briefly, and then it continued moving up. So here's another spot right here. You can see how often the Kijinsen can be a really good level of support right there. So we've got this little pullback, but we've got this candle. Now this is a doji, guys. A doji. Let me show you guys on the candle pattern reference sheet. Is let's look under bullish here. All right. It kind of looks like a spinning top also. It's when you have a wick on the top that's equal to the wick on the bottom. If it's flat, now this is what a doji looks like right here. Okay. It's where the opening price and the closing price basically is around the same level. That's exactly what's happened here. So what that represents essentially is the buyers and sellers are still struggling here. And it looks like, where we did have 2 negative days, now that it's moved down a little bit and we've got this reversal candle, it's higher likelihood tomorrow that we're going to get above. We're going to actually have a bullish day tomorrow after these 3 days of declines. All right. Just a higher probability, and based on this candle alone. We'll see if I'm correct tomorrow, right? But one negative thing that happened today is price did get under the 9 period. That's the green line right that you see right there. It takes the highs and lows divided by 2 of the last 9 periods, and that's how that's projected. The red line is the highs and lows of the last 26 periods divided by 2. And this white line in the background is the closing price today, projected 26 periods into the past. Okay, and if that line is above the candle, that's bullish, the candle 26 periods ago. The cloud itself projects into the future and is based upon the midpoint of the 2 moving averages here. You project that 26 periods. That's where you'll find the Senko span A light colored blue line. We want that to be above the Senkou span B, the purple line, which is essentially the highs, lows, all right, of the last 52 periods divided by 2 projected into the future. Very unique indicator, but it does a great job at identifying strong trends. And we are still technically in a strong trend, but we've showed a little bit of weakness these last few days here. And the fact that we're still under the Tenkan-sen, okay, I wouldn't be jumping in right away, right? I want to see confirmation by seeing price getting back above the Tenkan-sen like it did over here, for example, all right? Or over here, or over here. So we want to see confirmation, and we don't have that quite yet. Here's the QQQ ETF. All right, that also pulled back a little bit here, and it did close technically right under the Tenkan-sen, but again, a bullish candle. We get almost like a bullish hammer slash spinning top. I think there's a higher probability tomorrow that we're going to see an update. All right, so there's some positive news for you. Dow Jones also has pulled back now for 3 days. Again, a spinning top. I know it's red, but that's also considered a reversal candle after a pullback. And so it's also coming back to these prior highs. Let me just show you guys that candle right there. You can see how once price got above there, this is a level of support. So it's got support here. It's got the Kijun-sen for support. It's more than likely to pop back above. We'll see. And here's the Russell 2000. That one also dropped these last 3 days. You can see another bullish candle, all right, today. Even though the price was down 0.96% on the Russell IWM ETF. What about the VIX? Check out the VIX. Now, this is also giving us a signal here. So you can see that, yes, it was up 3.46%. It's at a level of 16.74. This represents market volatility in the markets. See that long wick at the top there? So what happened was the volatility spiked, and then what happened is it just kind of dropped quite a bit, didn't it? In fact, it closed right under the Kijun-sen right there. That's a good sign. That's a bullish sign for the market. We don't want to see this thing moving up because that will potentially lead to a much bigger drop, especially if we see the price popping above the cloud. That's going to be a problem. Now, we can see that all that action here with that long wick. If we switch it to a 5-minute chart, there's that move that you can see happening here. Here we are on the 25th, a big gap up. Okay. So price, the VIX popped to this level up here. It actually got up to around 17.74 and then dropped, came back, wasn't able to come and retest that 1775. In fact, over here you can see at around 1762, it dropped. So this is good. This is a good sign. We've got a lower high from the prior high on the VIX on the 5-minute. This is what the 15-minute looked like. All right. So we'll see what happens. Here's FEZ. Now, FEZ is the Euro Stocks 50 ETF. For those of you who want to have some exposure to Europe, this is not a bad ETF to have in your portfolio because you're basically buying 50 stocks, okay, that have exposure to Europe. And now the thing with this one, though, is the timing right now is not perfect because, as you can see, price is in between the two moving averages. We're also under that 6150 level that I've talked about in the past based on that prior high right there. You can see that we did, in fact, basically gap above it briefly, and then it closed right under it back here that happened on Tuesday, all right, September 23rd. And then on the 24th, you see pull back and then drop some more. But again, even the Eurostoxx has a nice bullish candle here. So we'll see if this can reverse. But yeah, I don't like the fact that the directional movement index is becoming negative here. The ADX luckily is still going sideways because what we don't want is that red line to be above the green line and the white line actually moving up, because that means that the momentum is going to start to move to the downside. Maybe I can find an example. Let's go back in time a little bit so I can show you what I'm talking about here. So if you look here, over here, the red line was above the green line, right? And do you see how the white line started to edge up right there? It happened around there. Okay, so if we go straight up, look what happened to price. Gap down again. It was a short little move down, right? And we might get that something like that where it comes and retests the bottom of the cloud if this thing starts to spike up again tomorrow, if we get more negativity tomorrow. What about the stocks I talked about on the show? Let's take a look at those. So I did review them. Okay, so there's 14 stocks we're going to take a look at right now, stocks and ETFs. Out of those 14 stocks and ETFs, there are just 4 that passed the Ichimoku test on both the daily, okay, time frame and weekly. So I'm going to show you both of those time frames. All right, here's CCJ, for example, and that is Kamiko Corporation. So let's start off with a weekly chart. So here it is on the weekly. You can see that price is above the moving averages. The cloud is still moving up. Chico span is above price. It was up 3.09%. The fundamentals don't look that particularly great, with profit margins negative 10.01. Sales growth is a little negative, down. Sales growth is 1.81% over the last 5 years. And but they've got a positive operating cash flow. It's a $36.0 billion capitalization, so it's a pretty large company. Here's the daily chart. Today, it actually, here's what happened this morning, just so you can get an idea of what's going on here. You can see that price gapped down, all right, started moving up, and then closed within the body of the candle. That's very bullish, right? And so let's see what else. And it popped right back above the Tenkan, the 9 period. So that's giving us actually a nice little buy signal right there on the daily. Here's IONQ. Let's look at this on the weekly chart first. It is starting to develop a kind of a slightly negative candle. It was down 6% today. Let's look at the daily. Now it is above the cloud, so it does get a check mark there for that. On the daily chart, it's pulled back and it's still above the moving averages, but you can see this pattern is not particularly bullish, and I'll tell you why. Because we've got both of these candles are reversal candles, and see how the wick on both of these candles is around the same height? They call that a tweezer top. I'm going to show you guys that pattern too. So tweezer top. So we'd have to go under bearish. And let me zoom in a little bit. Right there, tweezer top. So it's when you see, again, the wicks, the upper wicks, around the same level here. If you see that, that's telling us that that's as high as it could go. And then the sellers pushed it down. High as it could go. Sellers pushed it down. And that is precisely what happened here. And then you can see it drop. Now, it was a 6% drop in just one day. This is a volatile stock. It's got a beta of 3.22. So you're taking a risk here in adding a position on a negative candle. You can see that also the ADX here has slowed down. See how the ADX was moving up as price was moving up? ADX was also moving up, confirming that this was a nice strong uptrend. Now the momentum is starting to decrease, all right? So that's how you can quickly assess what's going on here. And I personally wouldn't be jumping into that one. PLTR, Palantir. Let's look at this one. I did have a position in this a few times. Well, 3 times. It looks like more than 3 times. Here's all the trades that I've actually placed in the past. You can go back in time, and if you are a member, you would see all of these. And of course, I share all my trades with the members in those videos. But the last time I owned Palantir was actually back here on August 5th when I closed the position after adding it here on July 23rd. I closed out on August 5th. It did end up moving a little bit, and then it dropped. Now it's actually coming right. It's basically around the same level as where I got out. And it's starting to show a little bit more bullishness as far as the fact that we've got the, the Tenkan, you can see had crossed under the red line. The green line crossed under. That's a bearish signal. Price had dropped down to the cloud, found support, and now it's showing a little strength. But it is also building what's called a base right now. So these candles right here, you can see it's kind of consolidating. All right. So if I was going to consider a trade like this, I'd probably want to wait until it gets above that box, and then it would make more sense, basically. And by the way, this is that's the daily chart. Let's look at the weekly chart. Here's the weekly chart, also kind of forming a little bit of a negative candle right there. All right, XBI, biotech ETF. How's that doing? It's doing pretty good on the daily chart. See that upward channel? Price above the moving averages, above the cloud. Here it is on the weekly chart. It is forming a slight reversal candle here, but it's still holding up above that daily trend line. And the other positive thing that's happened here is the Senkou Span A has crossed above the Senkou Span B. But if you're looking for, to add, does it make sense to be adding here as it's pulling back a little bit today, down 1.62%? I wouldn't be buying right here. I would probably want to see a little more strength coming back into it. Another thing I'm noticing here is that the ADX is dropping a little bit. So the momentum that was moving up is declining. And therefore, that's another reason why you may want to hold off a little. All right, let's take a look at IBM next. And IBM is actually also looking pretty bullish. Today, like I said, it was up 5.2%. Here's the weekly chart, okay? Check it out. This is 2 weeks now in a row where IBM, okay, is above the Tenkan. We've got a bullish cloud here. The Chiku span is above price. The positive DI has moved above the negative DI, and it looks like the ADX is starting to move up too. You can see that little move right there. So that's very bullish. We've got all these bullish volume days here. I like what I'm seeing. Where might it find some resistance next? I think it's going to probably find some resistance around the 296.16 level. All right, so that's a weekly level that I'd watch very closely. And how far are we from that level? We're about 4.8% away from that level. Here's a daily chart. So yeah, we get the bullish cloud that just formed here. The Senko Span A crossed above the Senko Span B. Price is above the cloud. Tenkan is moving straight up, so is Kijun, and the ADX is also moving up. I like IBM. All right, now we're going to get into the weak stocks. Now, I already went through all these. Berkshire Hathaway, folks. Berkshire Hathaway on the daily. Doesn't look terrible. I will say that because it did break above the cloud, came down, found support at the 200-day right there. But the problem with this one is the Tenkan is under the Kijun. You get the faster moving average crossover. That's a negative crossover. Otherwise, I kind of like it on the daily because you can see the ADX is starting to move up a little bit here. But that is the one thing that, that I'd like to see change first. And here's a weekly chart. We've got issues here on the weekly chart because right now, as you can see, the faster moving average also is under the slower one. When you get that negative crossover, the green crossing under the red, that's very bearish. If you go back in time on the weekly chart as well, Berkshire Hathaway, here's the closing price. Here we go back 26 periods. You'll notice that the white line, which is the closing price projected 26 periods ago, is under the candle. Now, technically speaking, this weekly candle is still forming. We won't know what it looks like until tomorrow. Highly doubtful that the closing price is going to get above the 539 tomorrow. You would have to have a candle similar in size to this one tomorrow in order for that to be accomplished. And I just don't see that happening. So I'd hold off on Berkshire. That's why it doesn't have a little blue flag here. Citigroup looks good on the weekly chart. Everything looks pretty bullish. But on the daily chart, what's going on? You can see we got a shooting star here on Tuesday. Wednesday got under the Tenkan. Now we've got a bullish candle. So it's very likely that tomorrow we might see it pop right back above. It was up 0.45% today. But otherwise, I like the stock. Here's CBOE, which is a financial services sector, financial data and stock exchange. You can see that it's currently inside the Ichimoku cloud on the daily chart. And we've got a bearish future cloud. Chiku span is underpriced. No, on that one. On the weekly chart, it looks more bullish. So we're getting a buy signal on the weekly, but on the daily chart, it just looks kind of like, okay, and that's based on this strength that we just recently saw. You could also argue that, yeah, it maybe created a double bottom over here. You can see how price reached this low, moved up, came back down, all right, around the same level, and then took off, broke above that high there. And so, but the problem is it's still in the early stages of a potential breakout. All right, that's the thing that I'd watch. CME, on the other hand, on the daily chart is currently under the Ichimoku cloud. Chiku span is underpriced. That's the white line that you see right there. It did find a lot of support here at that 200-day, rising 200-day moving average, the dotted yellow line that you see right here. See all these candles? They were just hovering around that area. So the fact that happened here in this area here is very bullish. And you can see here what's going on with the positive DI getting above the negative DI. Volume is increasing here. So I kind of like it. I like that. But the problem is, again, it's like under the cloud. You've taken out this low here. You create a lower low. You've got a lower high over here. Okay, that's also bearish. All right, let's take a look at Delta Airlines. Farmer Jim likes this one. Problem with this one is it's starting to show a little bit of weakness here. You can see since we reached that high up here with that shooting star. Now this is that long wick, small little body right there. Let me just go ahead and circle it so you can see what I'm talking about. Okay, that's a problem. All right, whoops. Let me show you guys that pattern reference on the candle pattern reference sheet. Under bearish, there's the shooting star. Okay, long wick, small red body, and it's a bearish single candle pattern. Guys, you can get that cheat sheet there, the candle pattern reference sheet on my Twitter page. If you go to my homepage here and click on and 8 more links right here, click on that, scroll down a little bit, go to my Twitter right here, x.com/bluecloudtrader. Click on that. Check out some of those other links while you're there. You might find them useful. And then what you want to do is scroll down a little bit, go to highlights right here, scroll down a little bit more. There it is. Okay. And here's the patterns cheat sheet as well. So you can download those from here. All right, let's get back to the stock here. So Delta Airlines is coming down now. I found support at that 56.73 level. In fact, it closed right above it at 56.74 today. 1 penny above that support level. Okay, and so that is interesting. It's based on that. It looks like it's based on that little low right there. But the problem here again is that we've got a lot of negative things going on. We've got this decline happening here. All right, that's not good. And positive DI is under negative DI. So I'd hold off, and you can see the ADX is moving up while the negative DI is above the positive DI. So no on Delta Airlines for now. FCX, look at this one. Freeport McMoran is just dropping like a knife down. From this level here, it dropped approximately 22.09% in just these last few days. High volume. That's a big drop. Here's the weekly chart. You can see it's also under the cloud on the weekly. So this is looking pretty bearish, guys. I'd stay out of that one. MU, Micron Technology. This one pulled back for these last couple of days. You can see that right there. Down 3.02%. It actually got under the high there of 157.54. It's at 156.83 that it closed. So it could potentially drop some more, but it did create a reversal candle. So we'll see what happens tomorrow. Phillips 66. Now it looks good on the daily chart. Everything actually looks pretty good on the daily chart. You can see here it even broke through this little consolidation box right here. Okay, that happened yesterday, and it's moving up. If we look even closer here, we also took out this high, which is around the same level basically, right? So that's very bullish. And if you look here, that kind of created almost like an ascending triangle pattern, which is a bullish pattern on the daily. And that looks, let me just pop it up here for you. I do like this pattern a lot. I've noticed that this pattern tends to do quite well with my trades, the ascending triangle pattern. This is the reverse. This is the bearish version here. If you see price basically creating lower highs and then breaking out below a horizontal level, that's the bearish version. And this is the one that we're looking at right now, the bullish one. So here it is. There's the higher low from the prior low, taking out that high. Here we are 2 days, and it's up 1.82%. However, with that said, let's take a look at the weekly chart. All right, now, even on the weekly chart, it's looking pretty good. The cloud has turned bullish. Price is above the rising 200. Tenkan-sen is above Kijun-sen. Chikou span is above price, but it just needs to get through that cloud. It's almost there. If you look at this actually on the weekly chart, guys, also, let me show you something else real quick. Look at this. We've got what we've got here is a inverse head and shoulders pattern. There's the head. Inverse head and shoulders pattern. All right, let's take a look at this. There's the head. Here's the shoulder. All right. Here's the other shoulder over here. It can sometimes be slightly higher like that. And what we've essentially done is we've taken out, it looks like basically these levels here, just barely. You can see that. So if it breaks through the cloud too, I think PSX has a lot of potential. The inverse head and shoulders, I'll show you the pattern here on the cheat sheet as well. I've talked about this before, of course, on the channel. Here it is, the bullish variant right here. So you've got the shoulder, the head, the second shoulder, breaking through that horizontal level. Okay, that's what we're looking for. You've also probably heard of the head and shoulders pattern, which is the inverse bearish version. I'm sorry, that's not the inverse, but it's like the opposite of this bullish version. This is the bearish version when you've got the shoulder here, head up at the top, and then the second shoulder here. That's taking out the horizontal level. This is the bullish version. So I think there's good potential with PSX here. I like it. I'm going to keep an eye on this one. All right. Let's get into the Mag 7 stocks real quick. Apple, just not all of them, but here's Apple, for example. By the way, some of the stocks that I didn't discuss on the show are probably in my members only portfolio. That's why I didn't talk about them. Just so you know, Apple, here's the weekly chart. Here's the daily chart. Looking good. Looking good on the weekly and the daily. It looks like it's coming close now to the 260.10 level, which is a very close resistance level. Let's see what happens if it can break through that. But the ADX is moving up. Apple's looking more and more bullish. I like this little bounce off the 250 level. See how it pulled back to the support and then it created that nice bullish candle. So it's more than likely to come and test that 260.10. We'll see how price reacts to that level. Here's Tesla. Tesla was down 4.38%. And when I looked at the closing price, which is $423.39, it actually was lower than the Tenkan-sen, which is also called the conversion line. The conversion line was 423.71. So it's under. Okay, now it doesn't, just something to keep in mind. And the momentum on Tesla has started to decline. I want you to see the slowdown first, right? So here's the momentum to the upside with Tesla. Moving up. Then you can see it right there starting to slow down, right? It's not moving at the same rate. It's not moving as straight up as it was, right? It started moving sideways now. And then right there. And now we've got a little bit of a decline, don't we? You can see that happening. So it's turning over. And then you see the negative DI moving up, positive DI moving down. Even though the positive DI is above the negative DI, this is not a good sign. All right. And the volume is also increasing here. And so otherwise, the daily looked good up until yesterday. I don't like the fact that that happened. And here's the weekly chart. We've got almost like a shooting star candle that's forming. That's not a good sign right there for the weekly, especially when you see price this far up above the moving averages, which is where it typically likes to stay, right? This is like its equilibrium zone, and it's quite a distance. The cloud itself has not turned bullish here in the future for the weekly chart. Senkospan A is still under Senkospan B. That's Tesla. Now, here's Meta. Notice how Meta's cloud looks more bullish with the Senkospan A above the Senkospan B, but it is, in fact, just moving sideways right now. And you can see that right here in this little box that it's forming, right there. So I would hold off on Meta. That's the weekly chart. And here's the daily chart. You can see it's pulling back right now. Okay. Get rid of that box for a second. It's pulling back into the cloud, retesting that 740, 790. It did close above it by 1 penny right there. But it's just not looking particularly bullish here. The negative DI9, the negative DI9 has moving up. Positive DI is moving down. ADX is moving up. This is also bearish for Meta. All right, and one of the stocks, PANW, Palo Alto Networks. This is one of the stocks that requested by our members. Here's the weekly chart. The other stock that was requested, like I said, is in the members portfolio. I'll only cover that in the members only videos. PANW, which is a stock I don't have in the portfolio currently, is right under the 210.39 level. You can see it stalling, guys. It's stalling. Okay, here's stalled right here. Okay, stalled right here, and here, and here. And we've got a bearish harami that's forming. right here between these two candles, and that's also bearish. So that's on a weekly candle. I would hold off on Palo Alto until we get confirmation above 210.39. Daily chart, you can see it's under the Tenkan-sen right now. It looks like it might pop back above, and then again it's going to find resistance at 210.39, which is just about 3.8% away from where we currently are. All right, now in the next video that I do, which will either be, I doubt that it's going to be tonight. It's going to, because it's a little late right now. I'm going to put together another video tomorrow with Tom Lee, and I will be going over in tomorrow's video. So you might want to subscribe so that you can view these videos. By the way, I'll be going over the strongest sectors. I'll kind of run through the weak sectors as well and why they're weak, and then I'll also maybe I'll do country ETFs as well. I haven't done that for a little while. I'll do country ETFs tomorrow as well. I think it's gonna be tomorrow, folks. I'm a little tired, so hope you guys enjoyed this video. Remember, it's free to subscribe to the channel. Let me show you guys how to subscribe real quick. If you're on your computer right now, you'll see a subscribe button in the bottom right hand corner. Or if you're on your phone, actually I'm not sure you can see it on your phone. Maybe you do. You'll see a little red button, subscribe button. You can click on that, or just come to my homepage, click on the subscribe button, hit the notification bell. I'll pop up in your subscriptions in the future. And then you can access, once you become now, if you want to access the member-only videos that I produce, you do need to become a member. You click on the join button, like I said earlier. All right, click on that join button for that. But this is free, so definitely do that. And I'll catch you all in the next video.